$1 million houses sitting empty.
I'm just telling people, like, a house is not technically an asset. It's usually a liability unless it's an investment.
The people in charge of the market caused the problem, but then they're trying to fix it, which is causing more problems.
Yeah. Like, average shoebox in Toronto is going for like $600K, you know?
Seriously.
Per se.
Stupid.
They
got themselves into this.
Today's topic, we're talking about one of the hottest things on the market right now, real estate. Average shoebox in Toronto is going for like $600K, you know?
Seriously.
What we're gonna do on today's episode, we're just gonna look at a few properties across like the Toronto area. We're gonna pull up an article, show you some of the wacky prices and what's really going on in the real estate market in Canada, and you know, get to really show some of our viewers like how hard it is to actually afford some real estate in Canada now.
Let's start with Toronto, man.
All right. I'm gonna pull up this property. This is a 3-bed, 3-bathroom, which includes like a basement. Right away from the outside, what do you think?
I mean, it looks a little old. It's cleaned up. It's an old house, but it looks small. Like, it looks puny.
Well, it's Toronto, right?
Right?
You're not gonna get much. Remember, this is going for $1 million.
Yeah,
$1 million.
999.
Yeah, and that's what they listed it for. It's probably gonna go for way more. If you look at the interior, like, this is a basic interior. Kitchen's pretty nice, I would say. Dude, there's like no living space. Kitchen is like, there's no room.
That's the whole kitchen, dude.
It's basically like a little condo downstairs. One thing I hate is when they do staging. If you actually go to the damn property, it ain't this big. You know, perception in the pictures, that it obviously will make it look that.
They'll use, like, if it's a small location,
Yeah.
they'll reduce all the furniture in the room to make the space look much bigger in the picture.
Oh, shit.
That's why, like, this room looks so empty.
Yeah, they just remove everything. So yeah, I mean, the washroom's all right. Look at that room. There's like no space, and they're trying to make space. You can tell it's an old fireplace.
Yeah.
This house is probably maybe mid 1940s or something like that, maybe.
What's the square footage on this?
22 by 112.
2,400?
For Toronto, I guess that's pretty big. Personally, I would never think this would be $1 million.
$1 million. Yeah.
Right? In the US, if we look at anywhere that has a 3-bed, 3-bath, you're probably looking at similar property like this for like $300K.
300?
Yeah, $300K.
Dude, that's insane.
Yeah.
I didn't even think that low. You know what I mean?
Okay, so there's that property. I'm definitely giving this one a pass.
Yeah.
Let's talk about the drivers of property pricing.
Yeah.
We obviously have, you know, supply. There's limited supply, limited land to kind of work with. There's demand. And that comes in the forms of demographic traits, whether it's, you know, immigration that's coming in. You know, they obviously want to build a house out. You know, people having stable incomes and jobs,
right,
really makes an impact. And through COVID, home ownership and wants for that has just grown.
Yeah.
Just because there's been a shift in dynamics of work as well. You can work from home anywhere. So that's definitely something to consider. And then there's also like population concentration and density. And I think that's one of the leading drivers of the whole kind of, you know, pricing craze. We also have deadly low like interest rates that have not been increasing for like, I don't know, God knows, like 10 years ever since the last housing crash.
Right.
Or sorry, the market crash. And so with all these kind of factors coming in, demand keeps on exceeding the supply, and you know, prices keep on shooting up. But you know, what we're seeing is a huge problem where the millennial generation is having a lot of issues getting into the market, and a lot of millennials are foregoing home ownership now at this point, right? So I pulled up some numbers also. The price to income ratio, which basically is a depiction of your income or household income to like the average price, is at 123%.
That is ridiculous.
Right? So you're looking at a depiction of like, it gets us region bound too. So this is just a mixture of over time of like, you know, the actual amount of the real estate price, the real price over like your nominal kind of family household income.
Right.
And you can clearly see starting in 2015 to, you know, the end of 2020, I think it's 2020. Yeah, 2020, it's increased by over 23%. That is
not a good sign.
Yeah. And here's another graph that kind of shows this. It's just like house pricings across countries has just like gone skyrocket.
Yeah.
But Canada specifically, 250x, 2.5x is what we're looking at in terms of growth. From 2000 to 2020.
This is incredible.
Right?
Like,
and then
nobody notices this.
Yeah.
You know what I mean?
It's wild to see that, right? So And over the last year, prices have grown 31% year over year.
Yeah.
And usually housing, you're looking at like 3% growth.
Yeah.
Right, a year typically. So let's look at another property here. This is a semi-detached property from what it looks like. This one's about 1,800 square feet, including the basement. Right away, like the interior is much nicer. It's a better layout because they don't have a wall covering the kitchen. Kitchen's pretty nice. I gotta say they've definitely done some upgrades.
The marble and everything, the appliances look good.
What we're really trying to look at is like, is this thing actually in real life, in reality, kind of worth
$1 million?
What it's priced at is $1 million. In reality, I don't really think it is.
If you take out this backyard part,
yeah,
everything else about this house looks like what you get from a typical new build, which is usually around like what, 700?
800,
yeah.
but like a lot of new properties are going for like 8, 9 now.
Yeah.
Because the builders know what's good. If you look at Toronto, man, you're not looking at anything less than $1 million. So you get literally fucked.
That's the entry, right?
Yeah, exactly. And so you had another property in like more remote regions across Canada, and you need to see these wild prices as well.
I'm going to show some of the stats associated with them. This one is in Oshawa, which is, pretty well known. But you can tell by the house, it's a little rundown. It's a lot older. 3 bedrooms and 1 bathroom. So 1 bathroom already is like a small home.
Yeah.
It was sold in 2010 for $213. And it sold this year for $701,000.
So 10 years, you're looking at 3.5x your money. I really what the fuck, man?
And just to put this in perspective, like we're getting this quote from a couple that like was trying to buy this property.
Yeah.
They offered $195K above, and they still couldn't buy it because it went for like $400K above.
I really what the fuck, man?
That's not okay. You
know
what I mean?
Here's another story. So we ended up putting an offer in a house at Woodstock.
Yeah.
Which is like this region, like hour and a half away outside Toronto. This was like a year and a half ago, maybe 2 years ago. The house was going for 500.
Yeah.
So we put, an offer of about 510. Thought going over a little bit would probably suffice. The house ended up selling for 575.
Yeah.
And I was just like, what the fuck? Like, there's no way that we would have competed. And it ended up being like some boomers buying it as an investment property. Millennials are just getting out purchased because boomers have the buying power. I'm just telling people like a house is not technically an asset. It's usually a liability unless it's an investment. Right. So because you're just living there and paying the mortgage, and it's essentially a liability. And like many individuals, they've talked about this, like that's not really an asset to you. Right. So it's just draining cash at the end of the month. Sure, you built equity, I understand that, but it's not an investment at the end of the day. And if you're forking over 200K more for that same property, I don't know what the fuck you're doing, man.
One thing I've been seeing a lot, and I'm sure you have too, is like sold over asking, or like 100,000 or 200,000. So this next story is just fucked. It's ridiculous. Where is it? We have a house in Tillsonburg, Ontario.
Okay. Where the fuck is Tillsonburg?
Tillsonburg is down here. And I'm zoomed out on this map right now. You know what I'm saying? Like this is pretty much on the border. You're talking like London. This is farm area. Like you're not much going on here. This house sold for 100,000 over asking in a matter of a week.
Look at the factor though. It listed in March 2018 for 329. It did not sell.
Yeah.
And then they relisted it in March 1st of this year. It's 2021. Yeah. And for 480, and it sold for 580.
Yeah.
So that's like almost double your money.
It's crazy.
In literally like 2 years, 3 years, whatever.
And you're going out to like the middle of nowhere for this house.
Yeah.
Like,
and I think this is the problem with Canadian real estate, or like the Canada in general. There's no jobs outside of the GTA.
Yeah.
Really? Like, to be honest, like all high paying jobs, Vancouver, Montreal, Calgary, Toronto, Ottawa,
right?
And outside, or like GTA, I should say. Outside of that, like nobody. What are you doing outside in like the boonies, right? It's like Tillsonburg is like a boony area.
Sorry to anyone who's from Tillsonburg. We're just being honest. Like, listen, I want to live out there too. Like, I want to get away from people, but like, I'm not paying this much.
Yeah, and I've had a few friends that have now moved out to different provinces because they can now.
Yeah.
Because they can afford to do it just because they're working from home permanently. Cost to live here is, in Tillsonburg, it's freaking 600K. And there's probably no infrastructure around there anyways.
So that's a good point, because that's actually what I wanted to ask you next. What do you think is going to happen after COVID? Because I feel like, obviously, supply and demand will be back to normal after COVID. But the thing I'm worried about is the shift now. Because you just said, like, nobody wants to live out in Tillsonburg. Sorry, Tillsonburg. But, like, now that most of us are gonna be able to like work from home and things like that, like when you don't have that obligation so much to live in the city, do you think that's gonna spread out the prices a bit more? Or
I personally think like once immigration opens up again, there's more flood of individuals, but where does that flood of individuals go? It's just always the major cities. One, there's community there, just so they can relate to. Toronto and the GTA is very diverse. Vancouver is diverse. Calgary is diverse. Montreal is diverse. So they're gonna land there.
Yeah.
And they need property. They need somebody to live, right? They'll probably rent a few years in, whatever it is, but like they'll eventually buys there.
Yeah.
Right. And so again, that whole concentration of population within one region is just gonna, again, I feel like it's just gonna drive prices up unless we get some like huge mortgage default like crap happening, but I don't even foresee that coming up. Canada's just one of those markets where it's just like pretty safeguarded with the banks and stuff, and our stress test has just gotten harder. So
2 new things that just came up on your point with the immigrants thing. Obviously, once things start opening up, we're gonna have more people coming in, buying homes or looking for homes. But one thing that they're trying to do to kind of slow down this market is they put a tax on foreign owners, because they found out that a lot of these houses are just fucking empty. $1 million houses sitting empty because someone is just rich and wants to hold it for the market to speed up again. So we're going to charge a 1% tax on those people. That's my first point. 2, you just mentioned they're going to increase the mortgage stress test. Do you think either of these are a good idea? I have my own opinions and I'm going to go 8 on this. But
in terms of foreign taxes, it should be a thing, I think.
Yeah.
Just because, you know, that could be somebody else's property.
Right.
Realistically, someone who actually lives there, provides to the economy. Problem here is like with Canada, our largest portion of GDP comes from real estate. So there's like this like, what's the word?
Like a delicate balance.
Yeah, exactly, right? So like the government ain't gonna do shit. They don't want to, you know, ruin that whole aspect of like GDP driving the, real estate driving the economy.
Right.
Because it's like the biggest thing that's supporting the growth.
Yeah. Especially right now. Like
exactly. So like, you know, with prices growing, even if we do it in real dollars and take out inflation, for example, it's still going to be increasing, and relatively from a factor of GDP, I think it's still strong. And so the government has their hands tied because they have to grow the economy per se.
It's stupid.
Right?
They got themselves into this.
If you're coming here and living here and doing like, you know, working and all that stuff, totally go for it. But if you're just buying investment just for the sake of fucking shifting your like God knows where money from, you should be taxed on it. Like a lot of them are purchased through shell companies too.
Right.
So you don't know who's purchasing it.
Exactly.
So it can be some like rich like Saudi individuals, or in the Vancouver market, it's a lot of Chinese investors. Right. And China, I guess, is a unique situation because the investment within China is not really prominent. So they look for offshore areas to invest in. You know, I think, you know, just to encourage more purchasing from a local perspective, I think that would kind of maybe discourage more money coming in. But then again, you're dealing with that whole morality issue or the economic issue of money coming in, investment coming in, and growing GDP and all that kind of crap. So it's hard.
Here's where I'm calling bullshit on all of this. I agree the 1% makes a difference, or I should take that back. The tax makes a difference. I think we do need to tax the foreign owners. But when you see houses going for like $200K over, that guy who's gonna buy $1 million house, a 1% tax is $10,000.
Yeah,
that's like he's wiping his ass in the morning.
Yeah,
I'm sorry. So that's not gonna make much of a difference for these guys. And then with the mortgage stress test, which is meant to make sure that you can handle, you know, a higher interest rate if it eventually goes up, which we definitely expect it to. That's just further fucking the locals.
Yeah.
First time home buyers still can't buy a new house now with the new mortgage test rules. So these people are just gonna pay that extra tax and keep buying. Like the foreign investors are just gonna pay that extra tax and keep buying these houses. So I feel like they're like pandering. You know, it's like, oh, we're doing something, but like we clearly can see that it's not enough.
As millennials, like it's gonna be hard to figure out where the housing market is gonna be going. But like, you know, a suggestion is if you can't get into real estate, you know, buy stocks, do like other pieces of investment that help you kind of support that. And it's not always bad to rent. Like a lot of people think, you know, just because I don't own a home, it's not a good thing. Long run, like if you do it right, you can actually be more wealthier off even not owning real estate in your portfolio. Right. Or you can get creative by like REITs and stuff. Yeah. Right. So there's ways of technically investing in real estate, but not like physically owning it. Everyone wants to have their own house, right? So that's another psychological thing. You know, as you grow, you go through university. First thing it usually is move out and find a place to rent or
You
whatever.
Get out, yeah.
Right. Find your wife, husband, whatever, whoever it may be. Get married, and then you're probably looking to buy a house. But with a lot of millennials, they're just pushing all these things out.
You know what's funny? I feel like the markets and the systems that have been in place for so long kind of pushed you to that. It's like, oh, by the time you're this age, you should be looking for a house, whatever. And they're kind of expecting that generation to start buying homes and things like that and settle down. But then now we're kind of like, I can't even afford it, so I'm not doing that. So it's kind of like the people in charge of the market cause the problem, but then they're trying to fix it, which is causing more problems.
Yeah, I think like even to Toronto to break even or to be like middle class or consider something like that, I think the income was like 130K now. I think it was something like wild, like that. So it just like goes to show like, you know, it's pretty damn hard to kind of make a living if you're like living paycheck to paycheck, and then less so even thinking about investing in real estate, right? So
this summer, if someone's trying to buy a house, what are you telling them to do? Like, what would your suggestion be in terms of like, are they going to look in certain areas, or should they just kind of keep their money and wait for the market to kind of figure itself out?
Yeah, so like I personally think like it depends on the individuals. Like if they have the ability to work remote, and like if they find an area that they can see themselves living in that's away from the city and just like say almost like a country lifestyle, like, you know, away from like the whole busy city and whatnot, suburbs and stuff like that, like go for it. Like there's probably opportunities out there to like move out, even look outside of province, like areas like New Brunswick and stuff like that. There's still housing's still pretty affordable, but if you are a city body and stuff like that, personally I'm not a huge believer in buying condos because they're just always so cash flow negative, unless you bought at the right time. Like now if you're buying a $600,000 condo,
just dropped.
Like you're literally looking at maybe like a $2,000 mortgage if you put 20% down. You're looking at condo fees, which are like $600 a month, so that's $2,600 there.
Right.
You have to pay a land tax in Toronto.
Yep.
You have to pay your normal land transfer tax. So Toronto's double the expenses, and there's all these legal fees. So by the time you buy it, you're probably in a hole. And then you have to continue doing that. And appreciation of condos is not as significant, but you know, it all depends on the user, right? I'd personally just put my money in like something like stocks or something. At this point, but not to say if I find an opportunity in real estate, like go for it. Otherwise, if you can find a pool of individuals that want to invest in, and you have like some certain documentation of how money's gonna work, go for that, because it's easier to invest with multiple individuals. You have more capital to work with, reduce risk. Might as well try that.
Those are kind of the options that we have, but like honestly, it's depressing. It is upsetting that, you know, we kind of have to deal with this. Hopefully the market starts to make more sense. And we can start owning homes.